It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we talk your property news, your real estate information 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Into the middle of our working week. It's a Wednesday, August the 7th today. And, you know, we like to whiz as much as possible all over Australia, finding the interesting aspects of real estate to talk about. And we do enjoy getting your emails. Sia, I hope I pronounced that right, in Brisbane. Thank you for your email. You wrote in to say that you are off to Indonesia to live with a friend of yours, and said that as hard as you've tried to break into the real estate market in Brisbane, it's been impossible. And we have featured that, of course, not so long ago. I think it was Malaysia that somebody had written in to say that they were moving off to. So you can't say it's a trend with a couple of people, but it is two that have written in to say exactly that. And if you'd like to get in contact with us, of course, our email address is myrealestatepodcast@gmail.com. Now, as I say, we do like to get across all of Australia, and this time we're going to go to Tasmania and catch up with Nick Hay of Howell Property Group, because there's a story or two there, especially around Tasmania's Central Highlands, which is attracting interest despite the temperatures dropping in winter as low as minus 13.9 degrees. It is pretty chilly stuff there, Nick, and good morning to you. Welcome to the Real Estate Breakfast.
Morning, Craig. Yes, that record week there a couple of weeks ago with temperatures up the high country, you could say it was subtropical, but the whole state was affected, but more particularly up the high country where it got the sort of almost second and third record coldest overnight temperatures recorded at Lyweenie. So it does make it tricky.
Now, apparently people are pretty hardy in Central Highlands because the demand is persisting in that area all year round. Domain noted this, especially for trout fishing, some of the purest brown trouts in the world, apparently.
That's correct, Craig. Look, the season has opened. It opens first weekend in August, so it is officially opened. Great Lake itself, where Myena, the main hub of the Central Highlands, that particular lake is open all year round, but the specialist fly fishing such as Arthur's Lake, Brady's Lake, and some of the sort of specialty fly fishing rivers, they open now, and from that, you do get a set of locals that want to recluse and live up there full time, but you do get a few locals, i.e. Tasmanians and interstaters from a diverse background. I know Gough Whitlam, many years ago, he owned a property in Myena, has his own little fishing lodge. So you get the high-end diplomats and business people from Sydney to your mum and dad investors in Tasmania that just love the outdoors, love the wilderness, love the wild, clean air of the high country.
Now, tell us a little bit about the properties, because it was reported properties selling between $160,000 to $700,000. They're being snapped up by locals and some of those interstate investors. So there's clearly a little bit of an appetite for people here.
Look, yes. I think post-COVID, local Tasmanians realised that they wanted to holiday at home and rediscovered the Central Highlands, which has been, it has kept the market strong. We've seen land values plateau somewhat. Purchasing a parcel of land up the high country is now around 100-odd thousand. But these, as you mentioned, 3 to 4 bedroom, 20-year-old shacks, as we like to call them, they're holding their value around that 250 to 300,000, and then better properties are selling up towards that higher 6 to 700,000. And obviously, those type of properties are well finished, well insulated. But if you're wanting a good, solid base, mostly constructed out of colorbond or prefabricated materials, we've found that 300 odd thousand is about the medium value for them.
You know, in terms of remote living, there seems to be also people wanting to live this lifestyle. I think it's probably a little bit too remote for me, but that doesn't stop many from doing it.
Look, I know some clients moved from North Queensland, Cairns, earlier this year to Wilberville, and they've sent me a series of photos of the snow and the week when it got to 12 below, and they find it's fantastic. So yes, there is people wanting to recluse of a complete opposite sea change from the tropics down to the ruggedness of central Tasmania, where you're close to 1,000 to 1,200 metres above sea level. You got to be self-sufficient up there. You're not relying on services, town waters, town sewer, town stormwater. The closest Woolworths or Coles are about an hour and a half away. They do deliver, but you got to be resilient and you got to be prepared to, if the snow does fall, to be snowed in for a couple of weeks. I know that hasn't occurred this year, touch wood, but previous years, you have to be prepared and be able to survive for longer periods of time this time of year.
Wow, the rugged lifestyle as described by Nick for central Tasmania. We'll come back, we'll talk more Tasmanian property. We'll move into Launceston, we'll do that next.
We dive deep into topics like buying, selling, investing, and maximising your property's value. From mortgage advice to the latest property data, your real estate journey starts here.
Well, yesterday it was a case of let's hold on for dear life as the RBA, of course, had their August meeting. And yesterday afternoon, as always, Anthony Landau was the one that broke it to us.
This has been one of the most highly anticipated RBA meetings for a while. And the RBA, on the back of the inflationary numbers last week, has held the cash rate at 4.35%. And I think you can hear the sigh of relief amongst many people.
We were talking about this earlier, and we kind of felt that, especially you, it was an 80-20% split in favour of holding. But you never know, right? Because there's always this possibility that the 20% could go the other way.
Inflation for the second quarter came in at 3.8%, which is still well above RBA's target of 2 to 3%. But I think the key numbers the RBA looked at was what's called the trimmed mean inflation, which takes out a lot of the volatility. That came in at 0.8%, which was slightly under expectations of 1% and was in line with the RBA's May statement. So I think the RBA is looking at that, thinking maybe inflationary pressures are easing, and have decided to hold for another month. So last week's inflationary data was absolutely critical to this decision-making process.
Yep, so there it is. That was yesterday afternoon with Anthony breaking that bit of good news. If you are a mortgage holder, the RBA, of course, deciding, yay, let's just stay in pause mode.
We are more than just a real estate podcast. Follow each week all of the main talking points and know your property.
And it is a Real Estate Wednesday. We've got Nick there in Tasmania this morning talking all things property, including those temperatures just way, way, way too cold for me at minus 13.9 degrees. Let's go to Launceston, because you were telling me, Nick, that things are moving but not at a rapid rate.
Yeah, we found, Craig, it's very stable across the whole state. Obviously in the major centres, Launceston and Hobart, particularly where the area I work in northern Tasmania, primarily. Okay, we've got quite a presence in the Central Highlands. It's a very stable market down here where there's been a lot of subject to sale, conditional contracts represented, hard negotiation between buyers and vendors to get properties sold, and we've found that the local government are putting forward some government support for the first home buyers.
Yeah, let's just talk about those first home buyers, because plenty of incentive coming from the local government. Is there enough property for them to transact? I guess that's the first question. And are they able to get their finances in order to be able to actually buy property?
And that's the tricky thing. At the moment, we're finding that banks are tightening, and I think that's across the whole country, isn't it? But I think with a few little incentives of stamp duties being slashed for first home buyers, so you don't have to pay stamp duty if you're purchasing a property for the first time. And if you're eligible, Home Share and My Home are two government-supported financial ways. You've got to apply and liaise with Bank of Us down here in Tasmania to see if you are eligible. But we're finding any homes, pre-existing homes that are below $500,000, look, those first home buyers are getting their affairs in order. If it's a bit of support from mum and dad, if they're going guarantor or the government backing them, we are finding that they are re-entering the market. We've found that middle $600,000 to $1 million market, that second and third home, is finding it a little bit sticky to get them moved, but we are. So look, it's a time thing, and obviously price and market will depend it.
Yeah, so the market there are so many different markets running at different speeds. You were saying that at the moment you feel that the market is almost kind of running at a pre-COVID market state.
Very much so. Look, we're finding that if someone's wanting to secure a home and they have to put theirs up to subject to sale with a timeline to sell it, we're finding that's a common occurrence. So it's not, we aren't being presented with multiple offers, unconditional multiple offers, mind you, where auction down here in Tasmania has never been the norm, where we're mostly a fixed price or an offers over style campaigns or expressions of interest, where if you need to sell a property, there is plenty of time to fund that venture to purchase the next property. So that was what the norm was very much pre-COVID, that 2017, 2018, 2019 period of time. Just the values have maintained. So look, the style of the contracts are very similar, just the values have been maintained across the state.
So plenty of conditions. I think that's what we're reading with what you're saying, coming into those contracts. Then, of course, the time expiring. That then goes to seller's fatigue, and I would imagine you've got a little bit of that at play in your market.
Very much so. Look, some properties at the moment, like 4 months on the market, 6 months on the market. So look, overall, it has buyers fatigue and vendors fatigue is something that we're finding, and it's sort of almost it's recreated as a buyer's market where they're seen to have the whip hand and they feel they've got authority to offer well below the listing price, but it just comes back to skilled negotiators that we are, some of us are, and get it underway.
All right then, Nick. Well, we'll wrap it up there. Certainly sounds like your market is in a bit of a sort of a flat-sounding market and obviously room to move. And let's hope that more of those first-home buyers get into the market. Hey, thanks for coming on to the Real Estate Breakfast. Enjoy your Wednesday.
Fantastic. Thanks, Craig. Good on you.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
As you say, for every 25 basis point increase, we're likely to see around about another 2,000 home borrowers starting to fall behind on their mortgage repayments. That could be the straw that breaks the camel's back for some of those households.
Let's just talk about the stress among recent borrowers, particularly showing up in Sydney and Melbourne, where people and their cash buffers, I mean, they're either getting quite low or in many cases, unfortunately, they're fully depleted.
You're spot on that we've seen higher levels of credit stress in Victoria and New South Wales. So those are the two regions where we've seen the worst deterioration in mortgage repayments. Some of the other states, maybe ACT and Tasmania, showing less stress, which is awesome to see over there.
We connect you to the best real estate information across Australia. The Real Estate Podcast.